Thank you. All right. FSTSwap. Okay, Gino, thanks for the question. Guys, that's another thing that we'll have. Give us a couple of days and we'll have a link on the My FSTSwap website where if you'd like to get a Zoom profile card, you see Doris is sporting one, Carlos, David, Mrs. Charles, Renee, and Sanjeev are all sporting the My FSTSwap Zoom profile cards. If you'd like to get one of those, we'll have the link ready for you. So just send us your profile picture. The theme here in these pictures, in case you didn't notice, is it's all black and white. So whatever picture you send us, we're going to make it black and white and just create a nice unified look and feel for the project and what we're doing together. So look forward to seeing you guys with your new profile cards. Look for that link coming up here shortly. All right, so Carlos has got us lined up with a couple of really interesting videos. We're going to start with the shorter of the two, and this is really just going to talk a little bit about all of the hype and noise that's been in the headlines here lately. So let's jump into that one.
Fear, uncertainty.
We can't hear it, no volume.
All right, is that just Carlos or is that everybody?
Everybody.
Everyone. I can't hear it either.
Nobody can hear it. Okay, I know what I did then. Sorry about that. Let's try that one more time.
It's not just me. I have a Samsung 10, but I'm just saying.
Yeah. Thank you. Appreciate it. All right.
Uncertainty, doubt.
So we talk about being in a bear market.
What exactly is a bear market?
All good bear market rallies end.
Are we in a bear market?
There is a crypto winner or a downturn.
There's a lot of fear right now going on in crypto markets. Bitcoin is down more than 50%.
Well, that's not reassuring. But if this is the end of crypto, then why is one of the largest venture capital funds committing to $4.5 billion into this supposedly disastrous sector? Is this venture capital to the rescue? Maybe, sort of, but there's more to this than meets the eye. Let's take a close look at what VC investment means for the crypto industry and how this may give you an edge when making investments during a
bear market,
bear market,
bear market,
bear market, period.
Announcement: today is the last day to join our new membership platform, Finova, and be eligible for our $10,000 giveaway on June 20th, on top of getting access to the best investor community on the planet, coaching every single day, trade signals, buy alerts, and a whole lot more. That'll be linked in the description below. So who are these guys dropping $4.5 billion into crypto? Well, in 2009, Mark Andreessen and Benjamin Horowitz founded their venture capital firm, Andreessen Horowitz, aka A16Z, which is kind of an acronym.
Clever girl.
And they're pretty good at what they do, investing in companies like Skype, Twitter, Facebook, and a whole lot more. Their interest in the tech space should be no surprise once you learn a little bit more about the founders. In 1993, Mark Andreessen, while in college, co-created the Mosaic web browser. Mosaic was the first web browser to successfully integrate inline images with text. It became the new standard for early web surfers. Andreessen took the Mosaic web browser private and renamed it Netscape Navigator in 1994. And this is where Horowitz came in. He used to be an engineer at Silicon Graphics and was hired at Netscape. He was quickly promoted to vice president of an entire department. And a few years later, Microsoft licensed the Mosaic code to create Internet Explorer. In 1998, AOL acquired Netscape for $4.2 billion and made Andreessen the chief technology officer. But he didn't stay long, because in 1999, Andreessen and Horowitz founded a cloud computing company called LoudCloud. This was later renamed to Opsware and was then sold to HP for $1.6 billion in 2007. So clearly both these guys have a knack for the whole tech space. And that means one important thing. Once your name is cemented in tech history, people will practically throw money at you. So after selling their companies for a combined $5.8 billion, they started their new venture capital firm aimed at building a new type of relationship with technology companies. They wanted to offer their experience and expertise to the next generation of entrepreneurs. And of course, make a boatload of cash. I mean, it's not a charity. Okay, so they're a big fancy VC firm. What does this have to do with crypto? Why should you even care? Great question. In 2013, Andreessen Horowitz began investing in all kinds of crypto companies, and boy, have they picked some winners. In 2013, they helped raise $25 million for Coinbase's expansion. They also invested in Ripple before even the seed funding round. Then in 2018, they really got serious about investing in crypto and raised $300 million for additional projects in what's now called Crypto Fund 1. And just 2 years later, they raised $515 million for Crypto Fund 2. In July 2021, they raised $2.2 billion for crypto investment in, you guessed it, Crypto Fund 3 Tokyo Drift. Now, in Crypto Fund 4, just last month, they raised $4.5 billion. That's mind-bogglingly large. In this round of funding, $1.5 billion is earmarked for seed investments. $3 billion is set aside for venture investments of projects at any stage in their development. And to drive home how much Andreessen Horowitz has been involved in this sphere, here are some of the projects that they're invested in. Real quick sidebar, what does me, Tom Brady, and Steph Curry have in common? Definitely not athletic ability or net worth or fame, but we're all sponsored by FTX. FTX is one of the largest crypto brokerages in the world, offering a super secure platform and insanely low fees for trading cryptos, NFTs, and now stocks. They do it all. Plus, if you use my link in the description, you'll save an additional 10% off for life on top of helping support this channel. Okay, by now you're probably like, yeah, I get it. This VC fund invests a lot of money into crypto projects. So what? Well, a look at why they chose to invest so much in this sector gives us insight into why they have become so successful as a VC firm, and it offers insights into the future of blockchain technology, which you may or may not financial advice, want to start using in your own portfolio. According to Mark Andreessen, many of the smartest people in computer science are going to blockchain tech, which is important for growth in the sphere, and we can't ignore that. Yes, the market is down right now, but that doesn't take away from the fact that tons of talent is leaving the Googles and the Amazons to get into Web3. This is just the beginning. Andreessen sees distributed consensus as one of the most important technological breakthroughs in recent years. That's just basically the ability of a decentralized system to pass information without the need for a central authority, aka the whole point of the blockchain. This opportunity is bigger than just finance. Distributed systems could be great for insurance, e-commerce, voting, and really anything that currently has a middleman. So what is the A16Z strategy coming into this bear market? Well, in their 2022 State of Crypto newsletter, they acknowledge that while the market is down, they see this as an inevitable and natural phase of the market. Sure, we might be heading into this dark, scary, cold winter, but this in no way appears to be a concern for A16Z crypto. Their motto for this type of season is that it's better to build. It's better to build in times like this. As internet veterans who have weathered the dot-com bust, the death of AOL, the rise of selfie sticks, they've seen it all and kept investing in new technologies along the way and kept making billions along the way. Web3 is just the latest playing field. You know, I could try to explain their reasoning, but I think they said it best. Consider that any prospective founders who swore off tech and the internet in the aftermath of the early 2000s dot-com crash missed the best opportunities of the decade. Cloud computing, social networks, online video streaming, smartphones, etc. Now is the time to consider what the equivalent successes will be in Web3. So basically, don't jump ship. It's just getting good. This is the time to do research, the time to build. And this is a strong reminder to focus on value creation. A crypto project that actually generates revenue or offers a service that people use will weather a bear market far better than the latest meme. Now, what if I told you you can steal from A16Z? It's not actually that nefarious. They have a team of more than 70 crypto analysts, and being that they have the manpower of the entire Chiefs football team dedicated to just sorting out which projects are worthy of their $4.5 billion, maybe it'd be wise to start paying some attention to where they and other VC firms are investing their money. Now, you might hate VCs, and that's fine, but that shouldn't get in the way of learning from them. But don't confuse that with blindly following them. While they've certainly made some good moves in the crypto space, they aren't perfect, and I have some major concerns. First, it's important to recognize that VC firms raise money for investment, meaning it's not their money being invested or gambled occasionally. When you invest, it's your money, for better or for worse. As exhilarating as it is to make money, it's infinitely more heart-wrenching to lose it. Just ask Luna UST investors. Second, when it comes to angel investments and seed funding, these aren't always opportunities that the average crypto Joe can buy into. So what I'm trying to say is maybe keep an eye on what they do, read the justifications given by their small army of analysts, and then do your own research. Don't rush yourself, understand what you're considering investing into, and do this even if it means missing out on a project, because there will always be others. There will always be others. Another concern is what the influence of so much VC money will have on the most essential tenet of crypto, decentralization. No one entity is supposed to have all the power in this space, but they already kind of do. Have you ever voted on a crypto project's proposal? If so, I'm sure you've noticed that your 100 token vote doesn't matter much next to some whale's 5.3 million. And this centralization is more than just frustrating. It can actually be dangerous. Hacks like Axie Infinity's Ronin Bridge revealed a shockingly easy path to obtaining the required 51% of validators needed to make away with more than $600 million by forging fake withdrawals. And anyone who is part of the Luna Anchor UST community probably noticed the centralized power of the Luna Foundation Guard and Terraform Labs. Nevertheless, decentralization remains one of the core tenets of the crypto community. So what effect will large VC investments into crypto projects have on decentralization? Will those who invest early at the lowest price possible end up with far too much power? Will project founders be so indebted to their VC investors that they make decisions to enrich and protect smart money over retail investors? These are all distinct possibilities. And for all Andreessen Horowitz's talk about working with founders and developers that they invest in, there isn't much emphasis placed on how this will affect anyone but their own investors. Listen to this. In 2016, Mark Andreessen, who's a Facebook board member, was criticized for working on behalf of Mark Zuckerberg, who was trying to maintain majority voting control of Facebook while at the same time selling off shares of the company. The plan was to convert the Zuck's shares after he sold them into this new kind of share without any voting rights. Sounds like a perfect plan, make money and lose zero power. And Mark Andreessen, whose job as a board member is to do what's best for the company and its shareholders, worked tirelessly on behalf of Zuckerberg to make that a reality. Now, Facebook shareholders sued Facebook and Zuckerberg eventually backed down. But what I got from this is that the powerful protect the powerful, not retail investors. He was definitely not interested in decentralization when it came to Facebook's power. So is all hope lost? No. VC investments are a double-edged sword. Without VC funds, many projects wouldn't exist and even more wouldn't survive. This is still a new market, and in a new market, there are so many opportunities, even for regular folk who are diligent in their research and careful in their investments, to make a ton of money. But just remember that while we can learn from the big guys, big money can and will influence investments. Do you think a company like A16Z always has your back? I think you already know the answer.
All right, so great video. As I was watching that, it made me think about a couple of experiences. So I had an experience where I worked for a cannabis company. It was a startup, and we were raising money for this company. And it was my first exposure to that world of going out and raising investor capital and just all the things that are involved in that. It gave me an appreciation for how that influences the way that you build your business, or how it could potentially influence the way that you build your business. It influences the way you create and execute policy, because you now have shareholders or investors, and you have their interests to consider. You have their timelines. They want a return on their investment. They want it in a certain period of time. And so it really gave me an appreciation for how a lot of those things impact the world of business. And so, we just had this whole conversation around VCs and so forth. And so it really it helped me to have an appreciation, contrasting to the way a lot of businesses are built, where they're going out, they're raising investor capital. And of course, the VCs are the big boys of the capital raise community. In our project and in DeFi in general, the idea is that we're raising money for these projects from individuals. And a lot of times these are individuals who otherwise couldn't participate in more traditional forms of investing. So in that company, for example, we could only raise money from accredited investors. And if you understand accreditation, it makes no sense at all. You make a certain amount of money, all of a sudden it makes you smart enough to know how to invest it. which obviously we know is not the truth, but this is just the laws that govern us. So you had to be an accredited investor, which meant that you had to make a certain amount of money or do a certain amount of, or have made a certain kind of or level of investment in the past. And so anyway, in DeFi and crypto in general, but specifically in DeFi as it pertains to investments and some of the other protocols and lending and so forth, that we now open up this entire world that people that may not make $140,000 a year, maybe you make $60,000 a year, but you'd like to and probably need to more than the guy that makes 140, need a vehicle that can help you get ahead. And the beauty of crypto is that it accelerates that journey of what happens today versus what happens tomorrow. Traditional stocks, we grew up being taught that you get a job, you invest in a mutual fund, and you go be a good person, good citizen for the next 30 years, and you come back and there'll be a big pot of money for you. And of course, we know that doesn't always or even often work out quite that way, especially in today's world. And so crypto offers us this opportunity to get involved in investing in ways that traditional markets often don't. Now, the question and the conversation around VCs, carries kind of to some extent, a double-edged sword. And one of the concerns about VCs in any industry, whether it's traditional industry or in the crypto industry, is anytime you have large influences of money, it influences policy. It influences the way decisions are made. And so if large buckets of money are coming from a particular entity, in this case, let's say that's the VC, then there's concern about whether or not the project is really decentralized. This is really the conflict around Web3, or some of the conflict around Web3, is that Web3 gives us things like crypto and DeFi. But then when we start to see big VC money come into the space, does it corrupt some of those ideals and principles? So all of that was to say this. One of the things that I appreciate about the FSTSwap project is that when you understand our coins, one is that they were all mined. So there isn't this type of VC influence or developer influence where there are huge holders of coins that have invested in the project that have a specific outcome in mind that they're after. We genuinely have a really well distributed project in terms of our coins. They were all mined from another coin. And if you look at the token distribution, it's incredibly decentralized. And so that makes for me, that's a big selling point for our project. I think as DeFi and as the space matures, we're going to see those kinds of differentiators mean more and more to the space and to people. And as a competitive advantage, it's an important piece that I think that we carry. All right, so let's jump into the second video. We're gonna talk about a broader range of things that have been happening in the market and in crypto in general in the last few days. So let's jump into that one, and then we'll be back.
Welcome to the Coin Bureau Weekly Crypto Review. Here are this week's top headlines in the crypto news. Crypto market collapse. BTC falls below 20K, ETH falls below 1K, and the rest of the crypto market gets wrecked too. Was this the bottom, or is there more pain to come? 3 arrows to the knee. One of crypto's largest VCs is believed to be insolvent after its founders ghost the community. Which crypto projects could this affect? Celsius below zero. One of crypto's largest lending platforms puts a pause on withdrawals after rumors of insolvency. Everything you need to know. Crypto job cuts. Coinbase lays off nearly a fifth of its workforce as Binance and Kraken continue to hire. What does this mean for the crypto market? Introducing the Euro stablecoin. USDC issuer Circle reveals the latest addition to its suite of centralized stablecoins. Why this is a much bigger deal than you think. Panama's crypto bill. The Central American country is on the cusp of becoming the second to adopt cryptocurrency at the national level. When will it happen? and a closer week at last week's top performing cryptos and where they're headed next. All this and more in just a moment. Good morning, afternoon, or evening. Thank you for tuning in. My name is Guy, and what you're about to see is educational content, not financial advice. You can find any topics you're looking for using the timestamps in the video timeline. And now for today's top stories. Last week, the bottom fell out of the crypto market. Leveraged traders lost billions of dollars, while crypto holders lost tens of billions, at least on paper. If you watched our recent video about the macro factors moving the crypto market, you'll know that last week's crypto collapse was caused by the Federal Reserve's monthly press conference. The Fed announced it would be raising interest rates by 0.75% for the first time since 1994. This is an increase that investors hadn't managed to price in, so the stock market and the crypto market came crashing down. It wasn't just the Fed that moved the markets, however. The Central Bank of Switzerland simultaneously announced that it would be raising interest rates for the first time since 2007, bringing its key interest rate from minus 0.75% to minus 0.25%. Yes, you heard that right, negative interest rates. Now, the European Central Bank also announced that it plans on raising interest rates for the first time in 11 years come July, though there are doubts that this will happen, given that the declaration alone is already bringing more indebted European countries to the brink of default. In any case, the actions and rhetoric of central banks around the world has many investors wondering how much lower the markets could go, be they stocks or crypto. As I mentioned in my weekly newsletter, this all depends on how long inflation lasts, or more accurately, the perception of inflation lasts. If, say, the war in Ukraine is somehow resolved, or the pandemic is suddenly declared over by the WHO, this could give the markets the fuel they need to stay afloat. In other words, what we just saw would probably be the bottom. In the absence of such resolutions, though, it's likely that all assets will continue to see a slow decline as liquidity is sucked out of the financial system. I happen to suspect that the crypto market will meet its bottom because of a catalyst that's likely related to a regulatory crackdown. And because regulators don't have the resources to go after each crypto project individually, my bets are that the exchanges will be the ones taking the regulatory beatings. I'll be doing a video about where exactly the bottom of the crypto bear market could be later on this week, so stay tuned for that. Now, you could argue that a regulatory crackdown on the crypto industry is inevitable, given the recent collapse of cryptocurrency's largest decentralized stablecoin, which is, or rather was, Terra's UST. If you watched our video about Terra's implosion, you might recall that I predicted we had yet to see the full extent of the damage caused by this crypto catastrophe. It looks like that prediction is starting to come true, as Three Arrows Capital is reportedly insolvent. As I mentioned in the introduction, Three Arrows Capital, or 3AC, was one of the largest crypto funds and was believed to have held as much as $10 billion of cryptocurrency at its peak. As you might have guessed, 3AC was one of the biggest investors in Terra, and 3AC co-founder Kyle Davis recently confirmed that they lost no less than $200 million of their portfolio in the implosion, a portfolio which stood at just $3 billion in April this year. 3AC was also a big investor in Avalanche, whose AVAX coin also took a tumble because of Terra and could potentially see even more downward pressure as the entities behind Terra have yet to offload the tens of millions in AVAX they hold. For what it's worth, it sounds like they won't be selling soon. Now, while there was lots of speculation that 3AC had gone insolvent after Terra's collapse, the rumours didn't really begin to circulate until early this month, when independent on-chain analysts discovered that 3AC had begun dumping tens of millions of dollars of Lido Finance staked ETH, or STETH. Now, if you watched our video about Lido Finance, you'll know that STETH makes it possible to stake ETH on Ethereum's proof-of-stake blockchain, dubbed the Beacon chain, without spinning up your own validator. More importantly, it makes it possible to trade this ETH freely while it accrues interest in real time. It should come as no surprise then that STETH was very popular among institutional investors and DeFi degens alike, and let's just say in 3AC's case, it looks like they were one and the same thing. Now, I'll be doing an in-depth video about 3AC's apparent collapse later this week too, so stay tuned for that as well. As to which other cryptos could potentially be affected, well, according to its website, 3AC's portfolio includes about every leading Layer 1 cryptocurrency and many of the top DeFi protocols. I'll leave a link to the full portfolio in the description if you're interested. These cryptos could be at a discount soon. Anyways, another entity that has been shaken by the recent crypto collapse is, of course, Celsius, one of the largest crypto lending, borrowing, and saving apps, which recently paused all withdrawals, swaps, and transfers for its users. As with 3AC, many began to speculate that Celsius had become insolvent after Terra's implosion. This is because Celsius supported both Luna and UST and had hundreds of millions of dollars deposited on Terra's now infamous Anchor protocol. The thing is that Celsius actually managed to withdraw all of its UST from Anchor protocol before UST lost its dollar peg, and it actually doesn't look like Celsius was hit that hard by Terra's collapse, if at all. Even so, this didn't stop Celsius FUD from spreading, and soon focus turned from Terra to Lido Finance's aforementioned STETH token. This is because Celsius's business model essentially involves taking user funds and lending them out to individuals, institutions, and select DeFi protocols behind the scenes to earn yield, the majority of which is given back to its users. Naturally, whenever someone deposited ETH into Celsius, it would turn around and deposit some of that ETH into Lido Finance for STETH, which it would then use to earn additional yield. Now, the estimates of exactly what percentage of Celsius's ETH holdings were in STETH vary, but CoinDesk recently reported that of the 1 million ETH on Celsius, around 70% of it had been converted to STETH. For context, converting ETH to STETH is a one-way trip until Ethereum's transition from proof of work to proof of stake, at which point it will be possible to redeem STETH for actual ETH. Even then, it might be a few months before STETH holders will be able to withdraw. Now, this isn't a problem, so long as STETH's price continues to mirror that of ETH within a few percentage points. But if STETH starts to diverge, this could become a problem for platforms like Celsius if all their users start trying to withdraw their ETH at the same time. As far as I can tell, this is exactly what happened, and it was made worse by the fact that Celsius was reportedly borrowing millions of dollars of stablecoins against its STETH holdings in DeFi protocols like Aave for additional leverage and yield, along with other assets too. Whatever arrangement Celsius had going on behind the scenes, it's clear that something broke, and with Celsius's investors refusing to bail them out, many are wondering whether they will take up Nexo's offer to buy them out, assuming they don't get completely crushed by regulations and lawsuits. Now, I must stress that there is a lot more to this story than meets the eye, which is why I'll be doing a video about Celsius's alleged insolvency later this week. Believe me when I say it's one you do not want to miss. In the meantime, you can check out my video about the safest way to store your cryptocurrency, because I have a feeling that Celsius won't be the last lending platform to go cold in the coming weeks. Crypto lending and borrowing apps haven't been the only ones feeling the heat either. Crypto exchanges have been hit surprisingly hard by the bear market, and many have stopped hiring altogether. In the case of Coinbase, it announced that it would be laying off 18% of its workforce. With 5,000 employees, this means around 1,100 will be getting the boot. Ouch. Coinbase CEO Brian Armstrong explained that we appear to be on the brink of a recession, and the company doesn't want to run the risk of spreading itself too thin, which makes sense. Brian also revealed that Coinbase had been growing too quickly, given the circumstances, and it's safe to say that Coinbase isn't the only crypto company that's been in this state of unsustainable growth. Still, some would say it doesn't excuse the 180 pulled by the exchange, which had announced earlier this year that it would be adding 2,000 people to its workforce, not freezing hiring or laying people off. Earlier this month, Gemini made the similarly surprising announcement that it would be cutting 10% of its workforce in preparation for crypto winter. Crypto.com also announced that it would be cutting around 5% of its workforce, and BlockFi announced that it would be cutting 20% of its workforce. Not that surprising, given that the company was slammed with a $100 million fine earlier this year. Now, as per this awesome picture by The Block, crypto companies have had to fire more than 1,500 employees over the last 2 months, with Coinbase taking the lion's share of that figure. Not everyone is firing, however. For starters, Binance CEO Changpeng Zhao announced in a cheeky tweet that his company was hiring for 2,000 positions, something made possible by the fact that it hadn't splurged hundreds of millions of dollars on expensive advertising. Like Binance, Kraken has been cracking on with its hiring plans and has over 500 positions open, and this could rise to 520 positions if the 20 people Kraken CEO Jesse Powell said are trying to throw the company under the bus are fired. On that note, in that same thread, Jesse seemingly confirmed that some of the employment issues crypto companies are currently facing are coming from the fact that they were growing too quickly and didn't manage to put the right people in the right positions. Jesse also implied that many of the people they hired weren't prepared to deal with the roller coaster that is the crypto market. And if the crypto market has been messing with your mind, I suggest checking out the video we did about how to deal with crypto stress. That will be in the description. As for what this all means for the crypto market, it means that crypto companies and crypto projects will be forced to optimize their workflows and workforces, which will eventually result in high-quality crypto products and cryptocurrencies that will be ready to rumble and rally during the next bull market. Speaking of new crypto products, USDC issuer Circle recently announced that it will be rolling out a euro stablecoin called Eurocoin with the ticker EURC later this month, specifically the 30th of June. If you're wondering why this is so significant, well, allow me to explain. If you watched our video about the assets backing stablecoins, you'll know that most of them are backed by some form of debt, usually US government debt. This is because the stablecoin issuers can earn a yield on reserves while knowing that they can redeem these reserves for dollars at any time. If you watched our video about Europe's upcoming crypto regulations, you might recall that the main reason why euro stablecoins haven't taken off is because the interest rates on European government debt have been negative for years, meaning euro stablecoin issuers would actively lose money. As I mentioned earlier, the European Central Bank is planning to raise interest rates for the first time in over a decade on the 1st of July, which is literally the day after the release of Circle's EURC stablecoin, which will of course be backed by European cash equivalents, aka European government debt. As such, Circle's EURC stablecoin is ultimately a big bet that the European Central Bank will continue to raise interest rates into positive territory and beyond, which, as I also mentioned earlier, many investors are doubting. What's interesting is that Circle's blog post announcing its euro stablecoin specifies that the assets backing the EURC will be held in euro-denominated accounts by financial institutions in the United States. If the European Central Bank does manage to raise interest rates without causing any of its member states to default on their debts, I imagine that Circle will expand its operations into Europe, especially if its upcoming crypto regulations are rolled out without any issues. At that point, Circle's EURC stablecoin could become a de facto digital euro in the same way that its USDC stablecoin has become the de facto digital dollar. This begs the question of what that kind of world could look like, especially if BlackRock comes to custody all of the assets backing the EURC stablecoin in the same way that it custodies the assets backing USDC. I suppose we're going to find out soon enough. You can learn more about BlackRock's unbelievable influence using the link in the description. Anyhow, across the pond, Panama's president unfortunately vetoed a bill that would have basically legalized cryptocurrency in its entirety. Now, if you watched our video about Bitcoin adoption in Latin America, you'll know that Panama was one of the countries that was most likely to adopt BTC after El Salvador. This is because a Panamanian congressman has been pushing for a similar bill on his home turf, though I must admit that it's even more amazing than I remember. In addition to allowing citizens to pay for goods, services, taxes, duties, and fees with BTC, the bill would create a legal framework for decentralized autonomous organizations, or DAOs. Not only that, but it would create a legal framework for token offerings of all kinds, be they initial coin offerings for cryptocurrencies or securities offerings for physical resources like gold and land. President Laurentino Cortizo partially vetoed the bill because he's worried that approving it will upset the Financial Action Task Force, or FATF, whose so-called cryptocurrency recommendations are on track to suffocate the crypto industry. As it so happens, the FATF recently announced that it will be releasing more details about its crypto recommendations later this month, and you can rest assured that I'll be unpacking those as soon as they're released. More about the FATF in the description. Anyhow, the silver lining is that the Panamanian congressman who tabled the bill vows to keep working on it until it's approved, and with a bit of luck, the next version will be more palatable for the president to sign. Let's just hope it's not riddled with the FATF's dystopian demands. Turning to the charts, we can see that BTC is looking insanely oversold no matter how you slice it. Under normal circumstances, we would have seen some kind of recovery rally by now. Now, as part of my research for my upcoming video on where the bottom could be, I came across an insightful indicator on TradingView called the Visible Range Volume Profile, or VRVP. As the name suggests, it shows you which price points had the most trading volume in the past. Logically, this means that BTC is likely to see some support around these levels. Now, I know the picture is a bit hard to see on screen, but the bounce we saw from 17K over the weekend is consistent with the small pocket of previous volume around those levels. If we fall further, the VRVP suggests we could sink as low as 12 to 14K before we see more support. I'll reiterate that this is a big if, and the VRVP is just one of many ways you can measure the potential bottom. Feel free to tell me about your method in the comments section. Last week's top performing cryptos were Helium, Bitcoin SV, Cadena, the Brave browser's basic attention token, and Theta Network. Starting with Helium, the HNT token is going higher because of all the news coming out during and shortly after the recent Helium House conference, including a partnership with tyre manufacturer Goodyear and a new physical device for Helium's peer-to-peer 5G internet. If we were in a bull market, this news would have taken HNT to the moon, but in a bear market, it's really nothing more than a blip on the radar. Full disclosure, I hold HNT as part of my portfolio, and you can find out all about it using the link in the description. Next up, we have Bitcoin SV, which is one of the many forks of Bitcoin, so let's leave it at that. Then there's Cadena, whose KDA coin is rallying in response to the ongoing development of the crypto project that was made possible by the $100 million development fund it announced in April and an additional $10 million developer fund it announced late last month. Alas, KDA's long-term price action isn't looking pretty, but all its ongoing development leads me to believe that it will have another chance at new all-time highs when the bull market comes back around. And yes, I will cover Cadena eventually. When it comes to Brave's basic attention token, I couldn't find the source of its recent pump. My best guess is the development of scaling solutions and privacy-preserving technologies that Brave affiliates are working on. It is again of no consequence because BAT has been thoroughly beaten down by the bear market. Then again, it never quite managed to blow up like other cryptos did, which is quite odd given how popular the Brave browser is. So, if you know why, let me know in the comments section down below. And finally, we have Theta Network, whose Theta coin is seeing some green in response to all the NFT activity on the Theta blockchain and all the cool features the crypto project continues to roll out, such as an API for its decentralized video streams. It's too bad that the bear market has beaten the bull out of Theta, but I guess that gives you lots of time to learn about the project and see if it has potential when the bulls come back around. Our most recent video about Theta Network will, of course, be in the description. And that's all for today's Coin Bureau Weekly Crypto Review. If you enjoyed it, you know what to do. Hit that like button, subscribe button, and bell icon too. If you're looking to maximize your gains during the bear market, the Coin Bureau Deals page is where you should go. You can find the link to that resource and many others in the description below. Thank you so much for watching, and I will see you all in next.
There we go. All right, some good stuff there. So, see if there's any comments that I missed. Perfect. Okay. Any thoughts, comments? Real quick, Carlos, just let us know. Carlos is still on the call. Unfortunately, he's not going to make it to the event in time while we're on the call today. But Carlos, while you're there, just hold up your camera, walk around the room, and grab some footage for us, and you can share it with us. And then come back on the next call. Tell us what the vibe was like and some things that you picked up. For those of you who missed it, Carlos is going to be in the presence of an NFT conference. And so we're really excited to see kind of what that energy and what that vibe is like from the folks attending that conference. So some takeaways for me, and I'd love to hear from you guys. Some takeaways from the videos that we watched today is there's a lot going on in the space. There's some major events that have happened. The story around, I think it's 3AC and Celsius. The 3AC story is really kind of scary, and it ties back into the first conversation around VCs and the enormous amount of influence and power that they have over projects. You know, they make decisions based on what generally is a lot of research and very skilled people, but when they get it wrong, or when they're too aggressive and maybe even some would say too greedy, and it goes bad, then we have bad fallout and it hurts a lot of people. And so we've seen a lot of that happen here in the last couple of weeks. Now there's the obvious downside of it is that the market goes through the shaking, and some people, it's a very personal experience if you're holding some of these coins to tank or if you're invested in some of these projects. But in the long term, the bigger picture is that the crypto industry really matures because of it. We're watching a video here where, we're talking about things that many of us, quite frankly, aren't very familiar with. These might be new terms, new companies, new projects, but the benefit of being on a call like this and getting exposed to this information is that it brings us an awareness. And if we're committed to, and I'm assuming if you're on this call, you're committed to being on this crypto journey, we're just not going to learn everything right out the gate. But the more that we give ourselves an opportunity to get exposed to different things, the more empowered we become. And there's a lot to take in what's happened in the last couple of weeks. And so, understanding and appreciating the impact and the power of VCs, and then now being able to compare that to, how is our project line up with that? Do we have massive major influence that's coming in from big wallet holders or people with an intention that may be different than ours, that we would be considered retail investors. Even our developers, unlike many other projects, they didn't establish, the developers of this project didn't establish the liquidity pool. So their influence on the project is very different than a developer or a project that's developed by a team that funded liquidity pools and therefore are going to drive their own interest. We really do have a kind of a unique setup in that regard. All right, so I'm going to pause, and if there are any questions, comments, any thoughts before we take off for today, I want to open up the floor for you guys. All right, quiet bunch today. Carlos, what are you doing a Thursday to get folks talking to you? Carlos, oh, by the way, let me just prep us for where we're headed. So we've talked about the importance of of YouTube and what we're doing in this phase of the project with FSTSwap. For us, it's super important that we get the message out to people that we haven't been speaking to, and to do that in ways that we can scale. We can move very quickly. spread a really large, broad message. And what we know is that, you know, people have a short attention span. There's a lot competing for their attention. You know, cell phones going off all day long, access to information is unlimited. And so part of how we're going to go about doing that is not just showing up in those spaces, being on YouTube and Twitter and so forth, doing calls like this, but it's also doing things that are fun and creative. And I'm excited that Carlos is committed to launching a podcast. We're going to do something, and we have no idea what, and I shouldn't say you have no idea. We have some idea, but I'm so excited to encourage and support Carlos in moving into this. So our Thursday calls may change format just a little bit. Really what we want to be able to do is Carlos is such an amazing storyteller. He's fun to listen to, fun to hang out with, and he loves crypto. And you can tell he loves it from his heart. He loves his project. He loves the people in his community. And so that's just a really cool combination to put into a, you know, whether it's 20, 30 minutes, you know, however long it goes, but we'll be able to take that content and share it out through our YouTube and various channels. And we just think it's going to be lots of fun. If you've hung out with Carlos on Thursdays or throughout the last year on our community, he's a super guy to hang out with and just kind of have a conversation, keep it light. And so look forward to us evolving and moving in that direction. We're going to see Carlos join us on camera in the next couple of weeks. I'm excited about that. Guys, lots of great stuff coming. We're really, really excited about where the project is, where it's going, and the potential it has in its future. And I want to leave this call, if there aren't any comments or questions, I just want to leave the call with this thought that, you know, you may not necessarily understand everything that this project entails for you, but I'm just going to repeat this over and over again for us so that as it starts to unfold, it'll make more sense to you. Because that's been my experience. And that is that there's a lot of money to be made in the project. And the obvious thing that we pay attention to is the coins that we're invested in, FIST, FON, OSK, and the price of those coins, right? So that's immediate short term. I can understand that and appreciate that. And then there's the long-term vision of, you know, we're mining for 7 years, so I'm getting FON. I expect or anticipate that we build this vibrant community, and that's going to mean that the value of the tokens I'm invested in grows. And all of that is a great story, and it's a great reason why we think people should participate in this project. But I want you guys to also really start to open your thoughts, your mind, to the possibilities that live and lie just beyond that. Immense possibilities as we're moving into a world where the underlying technology of blockchain is going to transform every single business around us. Every business will be transformed by blockchain because it's more efficient, it's less expensive. The friction point today is converting a business that runs in a traditional environment into a blockchain-based business. But it's only a matter of time. It's inevitable that we go there. Business will demand it because of its efficiencies. And so being on a call like this today, being in a community like this today, we could get excited about the coins. And I'm not saying that we shouldn't. We should. There's a lot of excitement there. But if you're positioned where you're ahead of this massive evolution that's going to happen with businesses and companies and charities and all of these different entities that are moving into blockchain and will need a blockchain to run their projects on, they'll be looking, the importance and the power of community will mean a lot because, you know, it's the old adage of location. In the digital sense, it's community, right? The location matters because of how much traffic is around that community or around that location in that community. And so digitally, community is really the key. And so the foundation of what we've been building has that element in it of community. And, you know, we are positioned and poised to be a gateway for all of these different projects and opportunities. And maybe you have no idea or no thoughts about what that might be today, and that's okay. But I promise you that if you stay open to it, those opportunities are going to come knocking. You're going to have a conversation or hear a conversation about somebody that wants to do something, and you might not even know exactly how to point them in the right direction, but I want to encourage us to just stay aware, stay open to it. Those are the kinds of things that there will be a need for, and we have a solution for it. And those two things, if we understand the need is coming and we're building the solution for it, and if you're in the middle, and if you are positioned that you understand that this is way bigger than Fond Fist OSK, it could be, doesn't have to be, but it could be. And if you choose to make it for you, for yourself, and you're open to that, I think the opportunities are way, way, way more enormous than you could ever imagine. So I want to leave you guys with those thoughts. I'll ask one more time if there's anybody that wants to add anything or ask any questions before we go today. Open the floor for you.
Carlos says he will be there soon, so
Oh,
two stops away. So wait for him.
Carlos,
I'm 2 stops away, party people.
okay.
I'm tight. I'm in Grand Central, and I'm 2 stops away from Times Square. All right,
Okay.
good.
Okay, so just
right.
make David keep talking for 2 more stops.
Yeah, just made it a little hard, you know.
All good. Hey, let me see if our friend Sanjeev, I know you may be in the middle of your work day, so if you can't join us, that's okay. But if you can, I want you to pop in here. I got a couple questions for you. Who else is on the call? Hey, Gino, good to see you. I think you popped in a little bit after. And Selma, I didn't see you. Good to see you, Selma.
Hey, David.
Hey, man. So I want to ask you a question. You shared something on Telegram yesterday, and it didn't have any identifier where you got it from. And then there was a question that came up this morning. So you shared an image about the largest liquidity pools. Can you just add a bit more context for us on what the image was sharing and just add some context for us, if you would.
Absolutely. I mean, I gathered it. I was obviously excited, so I just sent it out. But then I put some footnotes to it after that. This is a screenshot from Dex Screener, which is a coin market cap equivalent, if you may call it, for all DEX exchanges, right? So because you can't find FSTSwap in coin market cap, right? You can find everything else, but not FSTSwap and so many others. It's not just FSTSwap alone. Now, why it doesn't have that, that's a whole different story. We can get into a different discussion about it, but Dex Screener does track a lot of tokens that are purely in the DEX environment, right? So DeFi DEX environment only. So now when I look at that, it's been the case for some time now, but even during the bear market, I was trying to see if it's going to hold that position. It has, right? So it has Binance Chain, and you can see in the top 11, 3 of the positions are taken by FSTSwap. So that indicates that how strong we are in the ecosystem. Based on the Paul's call yesterday, if you remember, he did mention there's so many DEXs out there, but they're not all of them are active. Not all of them are super liquid, not powerful. I kind of wanted to piggyback on that comment, right? And then say, all right, look, it's backed up by the data. It's the 24-hour volume. We're still really good. But this one was purely based on, this one was purely based on liquidity. So the first, that's it. You're looking at it the right way. So if you, and all the way to the right corner,
For those who are on the call, so I went to dexscreener.com, and then the page it defaults you on, if you sort by liquidity, there you go. It'll bring the largest liquidity pool to the top.
This is really powerful. I mean, I don't know if a lot of people understand it. I'm pretty sure they do, but if you look at the ecosystem that's outside of just the top 10 coins that we see in coin market cap, this is behind the scenes, right? This is the DEX. You have FSTSwap taking position number 1 on the Binance chain. The way to read that is in position number 1 through 6, you got Binance chain, and after that is your Ethereum ERC chain, and right after that is your Osmo chain. After that is Matic. You have Avalanche right there. So quite a few out there, right? So you got Neo, Phantom too. You got CRO. So you have all those chains. We keep going. Yeah, exactly. You also have Uniswap. under the Ethereum, which is a second one, right? So the second circle that you look at, the way to read this is you get the network, which is BSC, ERC, Avalanche, so on and so forth.
Yes.
And then you got, and then the right next to that symbol is your actual swap. What is that? Is it a pancake swap? Is it Uniswap? Is it FSTSwap? You got, quite a few there. It's really good information.
This is interesting. Like when one of the things that we're going to get into next week is we're going to take a look at how FSTSwap compares to some other DEXs, and we're going to spend a lot of time looking at PancakeSwap. And it's really interesting when you look at this, in the top 6 positions, PancakeSwap is a mammoth swap. I mean, it's where we should be headed. It's where we're headed. So it's a good example of something to look at for what's possible and what's coming. And of course, as we get into it, you'll realize that FSTSwap is in a lot of ways a replica of PancakeSwap. And it's interesting that in the top 6, FSTSwap holds 2 of the top 6. And I forget the liquidity on PancakeSwap, but it's massive in comparison to where we are today. So that's a really telling story there, top 6.
Yeah, absolutely. And then if you wanted to hone in into, I mean, I couldn't provide all the explanation on the Telegram, but I wanted folks to kind of relate to the discussion that we had yesterday during Paul's call and right after that. And then if you look at on the left, you have BSC chain, Polygon chain, and then those are all the chains towards the left bar right there. Yeah. So if you wanted to just hone into BSC, because that's the only one that we can talk about or compare. Yep. This is purely BSC only, right? So now you have still here, we got pretty awesome, right?
In the top 10.
Yeah, we got 2. Yeah, we got taken all the coins are in the top 10.
Yeah, it's literally dominated by FSTSwap and PancakeSwap. And how do you know offhand, Sanjeev, how old PancakeSwap is? How long has it been around?
Oh gosh, I do not know the exact answer, but those are the details we can find on CoinMarketCap. CoinMarketCap is another great resource. These are the 2 that I look at pretty much every day because I also look at the charts and all that good stuff. But yeah, very similar. A lot of infrastructure that is being developed is very similar to PancakeSwap.
Hey guys, Carlos is here.
Yeah.
All right. Carlos is here. All right, Sanjeev, thank you so much. That's super insightful. Appreciate you sharing that.
Absolutely.
All right, Carlos. Where you at, bro?
Yeah, I'm here, guys. I am here. Taking a look around over here. Give me a second. Can you guys screen share? No crypto stuff? Crypto. But they moved all this. There's nothing really up. Okay. Got it. But they're upstairs too? All right, guys. So thank you guys. I'm looking around. Let me see. Hold on. I can screen share, right?
Yeah, just turn on your camera.
My camera?
Yep.
Oh, got it. Got it, guys. All right, so we got a couple of cakes over here for the party people that are here. I'm gonna go upstairs so that I can see that. So I'm at Margaritaville, live at Margaritaville in Times Square. I'm trying to figure out. Okay, so here, let me go here. If you see the screen here, it says NFT New York City.
Nice.
But apparently there was a bunch of stuff here on the second floor they have moved. So I'm gonna move upstairs and see if there's anything happening upstairs. Okay, guys, so bear with me. David, I'm gonna jump in this elevator, so if you can take over for now, and then I'm gonna come right back, okay?
All right.
Let me get to the next floor.
All right, see you in a moment.
So there you guys saw Inch, which is a part of that entire Uniswap based on the Ethereum, right? It's really interesting. Those big logos there, they're very related to the conversation that we were just having.
Awesome. Yeah, so let me drop that link in the chat for those of you who didn't catch that. Is Dex Screener. Oh, sorry, I sent it to everyone. All right. Yeah, good stuff, guys. If I strongly encourage you, spend some time on Dex Screener. You know, we get obviously we get a lot of questions, and it's natural that we get questions around price. You know, why isn't the price moving? But one of the cool things about looking at it from a broader perspective is that there's just so much more data that we get to consider. And you know, when you consider, okay, our price is dropping, but we still hold the largest liquidity pool, not just on Binance Smart Chain, but you take all DEXs combined, and FSTSwap is responsible for 2 of the top 6 liquidity pools. Yeah, I mean, do I want the price to go up? Yes, but the price only matters to somebody who wants to sell today. At the end of the day, right? If I'm not selling today, then the price today doesn't matter to me. Not that it's an unimportant metric. It's important because it gives us a sense of how the market feels about this product or project. But to me personally, it's only meaningful if I'm looking to cash out, and I want to cash out at a high and not at a low. All right, Bernard. Man, Bernard, I can't wait to get you to unmute and come on in and hang out. Working on it. Chip away.
Yeah, Bernard. Yeah, Bernard. But you said it right.
On Carlos's podcast. Maybe we do that.
Yeah, so guys, I just wanted to say, I'm waiting for these elevators right now. I'm in the lobby. But the fact that I saw a tweet earlier this week, and it said 4,500 different events this week. How you doing? 4,550 events this week in NYC crypto week. And it said but the NFT market is dying, but it was being sarcastic. It was the funniest thing. You guys can take that out of the elevator then. All right. So I'm gonna jump in this elevator, but this just reminds me that this NFT stuff and this crypto is
all right. I think we lost Carlos. In the meantime, let's see where he's at. So this is the 4th annual NFT industry event happening right now. Today's the 23rd, so today's the last day. All right. Yeah, share that one more time. See what that's about.
This is the most interesting technology shift since the internet decided to go social.
This will be a seminal moment. I think people will talk about the world of NFTs in particular as being sort of before and after this event.
We want to give the community a voice. We want to put as many people on stage as possible.
So I think building that authentic community connection is a great first step for any more traditional intellectual property owner to get into NFTs.
All of you hopefully are thinking about building, but the faster we build, improve user interfaces, the quicker we can avoid duplicating what happened with Internet 1.0.
All right. Carlos?
Hey. So we over here live. Hey.
Carlos, where are you? Where are you in the relation in the city?
So guys, right here, there's a couple of and there's some artwork over here. I'm gonna show you guys real quick. This is hey. How are you? Good. How you doing? So you're gonna make that into an NFT?
So we have everything
Yeah?
can be NFT. So we're gonna do
Wow.
the merchandise and shirts, and anything can be NFT, and also the painting.
Wow. So look at this, guys. So they are artists that are making all of these into NFTs. Hopefully you can see them. Congratulations, guys.
Sunset art.
Outfits and everything. How you doing, baby? Congratulations. I'm in the Zoom, and I'm showing them. We're spreading the education of NFTs, crypto, and this entire space.
Cool.
So yeah,
Once we're set up, definitely come back and check it out.
definitely. We are early, aren't we? We are early in this space, ain't we? Thank you, sir. All right. All right, guys. All right, guys. So I'm walking over here. Give me 1 second. So they're not registering on the second floor anymore. And is there a sample of that batch? It's like the. All right. 1 second. I just want to see your badge, champ. Oh, got it. All right. All right, guys. Let me head to the other side. All right. Is that 1 inch? Yeah. We'll just put the 1 inch. This is an educational crypto class that we teach. So nice. I'm just happen to be here, so I'm showing this. So yeah, I do community. Oh, you do? Yeah. So look. What's your name? Jordan. So this is Jordan. He does community and governance at 1 inch. Yeah. This is Matt. We got community support at 1 inch. So we're doing educational call every Thursday at noon. And we're teaching our community. We're on FSTSwap. Okay. So FSTSwap has, it's on Binance Smart Chain, no liquidity. Yeah. We have the biggest liquidity pool in the entire DeFi space right now. Oh, really? If you look up FSTSwap OSK, we're 303 million liquidity pool. Yeah. Yeah. So it's pretty awesome. Yeah, very, very. So yeah, so just saying how the fellas here are setting up. Yeah. All right, I'll be at the front door and letting you people in. Yeah. All right, guys. Thank you, guys. Pleasure. Nice to meet you guys.
All right.
So that was me just slipping it in right there, letting them know that we. And you know what he said? He said pretty solid TVL. So that's pretty cool.
You can tell his reaction was genuine at that number too. Like it's a very impressive number. To somebody who knows the space.
Listen, I'm here till 9 o'clock. Before those guys corner. So we over here by the kitchen. I'm going back down. That's pretty much it. This thing starts at 2, as I was just told. How you doing, sir? Good. It starts at 2, but they told him to be here at 1. Yeah. So anyway, guys, so I'm here live in Margaritaville, Times Square. Pretty exciting. The event starts at 2, and I am going to make a lot of contacts and connections for us. If I could get a couple of these developers to look at us and say, hey, why, we want to do the whole why you factor. Look at this right here. This is so funny. We're talking about horse racing. We're talking about DeFi. Let's see. So this is they're just taking a little virtual tour on this TV, showing you all the different projects. I mean, one thing I gotta say is, it's almost like people say, when people come into the space, they're like, you know, what should I invest in? And I always say, honestly, I'm in a project that is not losing money. We're gaining money right now. Remember when we got the PNLGs, guys, the PNLGs were 3 cents. Then they were 1 cent. They were 2 cents. They were 48 cents. We were happy as a clam, right? We're just collecting. Like I collected 23,000 PNLGs, right? So I got about, you know, I got 23,000 PNLGs, and I had to put in 7,000 to get my NFT. At the time, the PNLGs were at, let me see, at $1. So I got $23,000 from this project for free. Gentlemen, you guys happy to be here? We'll see, yeah. So they're here for NYC. They're here for the crypto event here. Give me 10 minutes. Let me just get a shake. I'll be right back. So guys, as I was saying, right now, right now, how you doing, champ? Right now, we're collecting like, you know, the what is it? $6.40 or something like that for the coins that we're collecting now. It's free money, and I can't wait to tell that story because, you know, there's not a lot of projects that have such a safe, deep liquidity pool, and you're collecting, you know, $6 a coin, and that's just now. That's the bear market. You know, that's why, I mean, I don't know about the rest of you guys. I'm certainly not selling my fund now because I'm just accumulating it. Because when fund in your wallet looks like, you know, it looks like 25 fund, right? It's still 25 fund. But when you see the value of it and it's at $25 each, you're going to see your wallet increase. And it's going to be pretty amazing. So that's it for me, guys. I'm gonna let you guys go. I'm back over here in Times Square, as you can see. And I'm gonna get back to this event. I have let me tell you something right now. I have two trucks to choose from, right? Here's one truck over here. You see that green truck right there?
Yeah.
That's the weed truck. I'm not going there. This truck right here is the smoothie truck. I get a smoothie every day here. How you doing, guys? So I'm going right here to this fresh smoothie truck. I get a smoothie every day. I get a number 10. So this is me ordering my number 10. Champ, how you doing? Can I get my number 10? So number 10, let's see real quick. A number 10 is banana, mango, strawberry, pineapple. So I got to stay hydrated, guys. Love you guys. Talk to you guys soon.
All right.
Over and out, live from Times Square. I'm going back to the event. Thank you, guys. Thanks for waiting. I'm sorry I took so long to get here. If I got here any earlier, we wouldn't have seen anything anyway. The event starts at 2. All right, guys. I'll talk to you guys soon.
All right, man. Appreciate you.
All right, guys. Thank you.
All right. That was fun. Thank you, Carlos, for that. All right, ladies and gentlemen, thanks so much for hanging with us through Carlos giving us a pretty cool behind the scenes tour. We're going to call today's meeting a wrap. Look forward to seeing you guys on Monday. We've got some really cool things we want to dive into going into next week. So please join us on Monday's call, 10 p.m. Eastern. Have a fantastic weekend. Look forward to seeing you guys again on Monday. We'll leave the call open for just a bit if you want to unmute and say your goodbyes.
Bye.
Goodbye, everyone.
Thank you.